Welcome back. Well, we've told you about the equity picture where the market's still down about 100 odd points. Let's figure out what's the latest in commodities. Manisha is with us with the latest. Manisha, what's catching your eye?
Oh, the crude oil prices, because we've seen constant decline into this one, and we are back yet again below that $60 per barrel mark for the U.S. crude oil prices. Well, we are trading at a 4-week lows when it comes to the crude oil prices, and we are headed for a weekly decline as well. When you look at the U.S. crude inventories, well, that has been one of the major reasons that is putting pressure on prices, up 4.4 million barrels, and this is a third weekly gain that we are looking at in sense of U.S. inventories. Remember, the U.S. inventories have been climbing. The U.S. production is near all-time highs as well, and that continues to put pressure. China, in the meanwhile, even as there are refining maintenance is happening, but China is continuing to stockpile crude oil prices as and when they go around that $60 a barrel mark, building reserves. So markets do believe that going forward, China perhaps may need so much crude oil because they are stockpiling right now. Apart from that, the Ukraine president signaling move towards a peace talk. We know the details about that. We've been talking about that. That's yet another reason that the markets feel that the Russian supplies may not get disrupted, and some of those sanctions perhaps will go away as well. But for today, it is about sanctions on Russia's Lukoil and Rosneft, and markets believe that that could leave nearly 48 million barrels stranded on sea. That's a lot of crude lying around there, and that also isn't a reason that you would buy around in sense of crude prices right now. And then let's talk about India, where we're looking at import bill declining by 13% between April and October at around 71.2 billion. Well, the data suggests that the imports have not declined, but it is the crude oil prices which are down by nearly 15% from where they were in the previous year, and that really seems to have made the difference. The import reliance, also as per the latest ministry data, shows that India's import reliance stands at 80.2%. Interestingly, also when you look at India's domestic oil production, well, there has been a decline between the same period to the tune of 1.2%. Interestingly, there's plenty happening in the international markets when it comes to India as well. Latest with Reliance saying that they will comply with the European Union in sense of import of products derived from Russian oil. So that really seems to be making a change there. And then apart from that, there also have been various statements from Minister Puri suggesting that India's PSU oil companies will sign a 1-year term deal to import nearly 2.2 million barrels of LNG from US. At this point in time, with the kind of deal that has been done and the import India is doing, that accounts to nearly 10%. And then India's crude oil imports from US also seems to be rising. For the month of October, we've seen a neat 540,000 barrels per day come in because of that as well. Take a look at the price moves then. And for the crude prices in this year, we started this year with $75. We saw a high of 82, and then we've been languishing near the low of this year currently as well. If you look at the crude oil prices, the last 3 years have been in the negative. 2023 was a 10% decline. Last year was 3% down. And this year we are down by 18%. Not just that we are down for the third straight year, but we are the lowest in 3 years that crude oil prices have seen in sense of averages there. Next year as well, it's expected that you could be looking at surplus going forward, and that comes in anywhere between 1.5 to 4 million barrels per day, often expectations coming in from OPEC, IEA, World Bank, etc. The price moves in the next year, well, that really seems to be divided, but most people seem to be believing that it is going to be anywhere between $50 to $68 a barrel. That is where overall gets summed up. The lowest coming in from the IEA, Goldman Sachs, which are talking about mid-50s, but you also have Morgan Stanley, Citi talking about early 60s, and then mid-60s yet again coming in from Bank of America and World Bank. So the range that we've seen this year perhaps could be a range next year as well, but pretty much on the lower side.
Okay, all right, Manisha. Thank you very much for that. That is as far as the oil markets are concerned. By the way,